Okay, good morning. It's cold morning. We're going to be talking about Chapter 12 today. And first of all, what's due this week? The attendance quiz covers class today. So it will be available this evening. Brian, after class, let's talk about that attendance quiz. Okay, so the attendance quiz will be available this evening, and the Chapter 11/12 homework. Remember, Chapter 11 we did Wednesday last week, so Chapter 11 and 12 homeworks combined into one. I did one homework so you wouldn't have to be chasing around different assignments. I believe there's one homework. Okay, and then Sunday, December 1st, video quiz 25 is over Chapter 13 in the Blackboard videos. That's the last video quiz coming up. Then Wednesday this week, the university closes at noon, and it doesn't make any sense for us to have class at 7:45 and for the 2:15 class to not have class. So we do not have class on Wednesday. So you can finish up class today in theory for the whole week. Okay, so with that, and then next week, by next week I'll have the exam information out, and we will have the schedule for the rest of the time. Also, before we get into Chapter 12, do know that Haley is doing tutoring this week tomorrow only, and I sent out the link yesterday for the sign up for tutoring. So she is tutoring for Chapter 12 tomorrow, and she's got a couple sessions tomorrow, so check that email link to sign up for tutoring. Okay, so with that in mind, so next week we tidy up everything. We finish Chapter 13. We talk about the exam. So I guess that's it. Like, this is week 14, next week's 15, and then we're done. Okay, so Chapter 12. Chapter 12 is about the statement of cash flows. And for me, these three learning objectives, the purpose of the statement, the operating, investing, and financing activities, and preparing the statement using the indirect method, they all kind of overlap together. We are not covering learning objective 4. That's just a different way of preparing the statement of cash flows operating section. So it's the direct method. Most companies in the U.S. use the indirect method, so that's the one that we're using. So we're just doing learning objectives 1, 2, and 3. Okay, we're going to start. You would have watched these videos, so we're going to start with some questions and then do some other things. So the first one, the statement of cash flows is an optional statement that can be prepared along with the income statement, balance sheet, and statement of retained earnings. True or false? This question, if you were to write it down, you could actually end the question after the statement of cash flows is an optional statement, because that's the main part of this question. So the question is the statement of cash flow optional or not? False? Okay. And that is true. It is false. Okay. The statement of cash flows, this goes back to the very beginning, Chapters 1 and 2, when we talked about the statement. The statements, there's 4 main statements, the income statement, statement of retained earnings, balance sheet, and statement of cash flows. So that's something we've had from the very beginning of the semester. The statement of cash flows is a required statement. Okay, so we don't specifically state that in this chapter, but it is a required statement. Okay, so another question. What is not on the statement of cash flows from this list? Do you know what it is?
I think it's the
Okay, I got an answer of A, and that is indeed right. In this one, you don't even have to really read the chapter. You think about, are you going to report the number of checks not written at the end of the period? That doesn't even make sense. So the statement of cash flows, what it does report is how we use cash in the current period, how the change in the cash balance, how the cash balance changed, and where the cash came from in the current period. Okay, so the statement of cash flows is designed to fulfill all of the following purposes except which one? What do you think? See? Okay, the statement of cash flows is designed to fulfill all the following purposes except two, and it's actually B, assess the collectibility of accounts receivable. So by default then, if that's the one it's not designed to do, statement of cash flows does show the relationship of net income to changes in cash, because on the statement of cash flows you have the net income, you also have changes in company's cash. See, every statement you have is evaluating management decisions. You're looking at statements to see how things went. The statement of cash flows can help predict future cash flows as well. The statement of cash flows does not assess specifically the collectibility of accounts receivable. Okay, so that's B is the thing that is not specifically, it doesn't specifically address. I think we have maybe one more. No. Okay. So what I want to do is I want to talk about the statement of cash flows. And this is a page to note from your book on page 702 in your textbook. So that's what I'm going to be highlighting, different segments. So page 702 in your textbook is where this exhibit is coming from. Okay, so I just want to, this is a statement. I want to go over the parts of the statement, and then we'll do a statement of cash flows. So okay, first of all, the first thing on the statement of cash flows is the cash flows from operating activities. So the key word there is operating activities. Operating activities are first. By the way, this is the indirect method of preparing the statement of cash flows. The indirect method and the direct method will come up with the same answer, but the way it presents it is different. So we are using the indirect method only here. Okay, so cash flows from operating activities is the first section. Okay, cash flows from investing activities is next. So when you think about this, it's operating, investing, and then down the way is financing. Okay, so you have three different types of cash flows. Those three different types of cash flows, operating, investing, and financing. I will tell you right now, you need to know all three, and you need to know what examples go into which. Okay, so what is in each one. And actually, this statement we've got right here on page 702 is an excellent example in terms of being able to see examples of what's on that statement. That's why I'm calling attention to this. This is a really good template for future. And then down at the bottom of the statement, what we're trying to get to is the ending cash. So we're starting with, we're saying here's our operating cash flows, here's our investing cash flows, here's our financing cash flows. When we add all those up, that's our change in cash, and we can add or subtract that to our beginning cash, and then we end up at the bottom with our ending cash. So the statement of cash flows, the important thing of this is it's telling us where our cash is coming from. And that's important. When we look at a company, looking at the cash flows from operating activities, that's what they're in business for. We would expect to see, in most established companies, we would expect to see positive cash flows from operating activities, because that's where they're getting, that's where they're selling things, that's their normal operating activities. Investing, If you're getting cash flows from investing, that means you're selling off equipment, land, things like that. If you're using cash to invest in the business, that's a good thing. Financing is how do you finance the business? Is it from debt or equity? Okay, so what we're going to do now is look at each of those sections individually. The first one, operating activities. Okay, so all I've done here, I'm still on page 702. Okay, page 702, now we're looking in depth at the cash flows from operating activities. The first thing on a cash flows from operating activities is always net income. Net income is first. What we're trying to do with the cash flows from operating activities is we're trying to take our net income and convert it back to what it would have been on a cash basis. So we're doing a whole series of adjustments. So we start with net income and then we add or subtract a bunch of things. This list here, again, going back to your reference sheet for your exam, I would absolutely have this statement on my sheet somewhere. You can write it pretty small. This is calculating cash flows from operating activities, the things that you add or subtract. The first thing, you're going to add back depreciation, depletion, or amortization. And the reason you're adding that back is you would have deducted that when you got to net income, and depreciation is a non-cash item. So you're trying to get to what your income would have been without the non-cash items. And then you add back loss, because loss would have been deducted, a non-cash item. You subtract out gain because it would have been added. So all these items in this list are adjustments to convert net income to a cash basis net income actually. Okay, so that's that first section. Okay, next section down. Okay. Oh yeah. Okay, let me see if I'm back on track here. Okay, so net income is always the first item in operating activities. Yep, got it. Okay. Okay, and then we're doing adjustments to reconcile net income. Okay. Okay, and then you have the total at the bottom. So you start with net income, you add or subtract a series of adjustments, and then you get the total. And again, on that reference sheet for your exam, I would put this for sure. We're going to have a lot of questions coming up that refer to this information. And again, this information is coming from page 702 in your textbook. Okay, so then the next section is the cash flows from investing activities. And what we're going to see here is, I'm just blowing this up bigger, cash flow from investing activities. What things are on here? Well, the things that are on here would be long-term asset sales. So these are things that deal with your long-term assets. So what's in long-term assets? Investments, land, building, equipment. So if you sell it, you purchase it, you collect notes receivable, those are long-term notes receivable, and then loans to others, long-term loans to others. That'll give us our net cash used. And then financing. And financing deals with the long-term liabilities and equity. So what we're going to see here is we're going to see issuing stock, sale of Treasury stock, purchase of Treasury stock, and then our long-term borrowing and our long-term repayments. So, and payments of dividends. So those are the cash flows from financing activities. So all we've got here are a series of everything that's going on, and then down at the bottom, okay, this net cash increase or decrease during the year. What we're doing, the three items, the net cash provided by operating activities plus the investing activities plus the financing goes to be our net increase. And then we're going to add our beginning cash and subtract our ending cash. Note that if it's used by, it's subtracted. So we can have cash that's coming in, which is added. we can have used by, which is subtracted. Yes? All of these are important. Every single item on here. Yeah, you need everything on here. Oops. Okay, so we have the operating activities, investing activities, financing. They get added together. Then you add your beginning cash, subtract your ending cash. And again, this is an excellent example, and I would have it on my sheet. Okay, so going back to what we just talked about a little bit, the statement of cash flows classifies cash receipts and payments as operating, non-operating, and financial activities. True or false? What are those three categories is basically what I'm asking here. Okay. Do you have answers, Brian? Okay. I've got false here. Okay, and that is false. It's operating, investing, and financing. Okay, so know the three categories, and then also know the things that go into those three categories. And we're going to practice. We're going to practice this here. We've got a couple activities coming up. Okay. Now this one, of the three types of business activities reported on a statement of cash flows, investing activities are the most important when evaluating a business. Okay, so you're looking at a business, you're evaluating it. Of those three types, what's the most important? What do you have, Brian? Okay. Yeah, I've got a false here. Just one. I just only need to ask one. Okay. I got my sample one. Okay. So of the three types, the most important type is operating. Operating is what we want to see the company generating cash from. Now, if you have a startup company and it has negative cash flows, that's not necessarily a cause for alarm. But when you have an established company going along, their operating cash flows should be generating a healthy amount of dollars. If you see an established company that's got negative operating cash flows, then we start to worry that the business is in trouble. Okay, now we have to pick out what investing activities are. So we have a company that sold land for $150,000, purchased equipment for $30,000, and issued bonds for $100,000. What's the net cash provided by investing activities? What do you think? Okay, you get a free pass. Okay, what do you think? B? Okay. Okay, I don't know what the answer is off the top of my head. C? Okay. Not sure? Okay. It's drafty up here. C? Okay. What do you think? You still adding? Okay, let's do it this way. Okay, selling land. Let's go one by one on the cash flows. Okay, so selling land, is that an investing activity? Yes. So we know that land is an investing activity. So would we get cash or spend cash if we sold? We would get cash. So when we're computing our answer off to the side, we would have a positive 150. Okay, so let's go on to the next one. Okay, purchased equipment, is that an investing activity? Yes. Purchasing equipment is also an investing activity because it's a long-term asset. All investing activities are long-term assets. Okay, so then if we purchased equipment, would that be added or subtracted? Subtracted, because we're purchasing equipment, so we're spending cash. So we have a plus 150 and a minus 30 right now. Okay, so the next one down, the only other cash item, issued bonds, is that an investing activity? Right, it is not. Issuing bonds is a financing activity because it's a long-term liability. So our only two cash flows in here are the $150,000 cash and coming in, and the $30,000 we spent. So very good. So the answer is C. Okay. So the bonds issued for $100,000 cash are a financing activity, not an investing activity. So the answer is $120,000. Okay, another thing I wanted to point out in your book, and actually you could kind of look at this now, I adapted it. Okay, so when we're trying to decide what statement things go on, like we just had, we look at the balance sheet, and the first thing on the balance sheet are the current assets. Our current assets, other than cash, the change in all those current assets, those show up on the operating cash flows. So if we're looking at a change in accounts receivable or a change in accounts payable, that ends up showing in operating cash flows. Moving across to the current liabilities, those also show up on the operating cash flows. So if you're looking at a current asset or a current liability, that impacts operating cash flows. Okay, then what we have, long-term assets. All long-term asset activity shows up in investing cash flows. And then over here, long-term liabilities and stockholders' equity, those are financing cash flows. That's how you tell where something shows up. That template that we went over on page 702 in your textbook, that's a really good template. This is also further reinforcement of where cash flows show up on the statement. So investing cash flows come from long-term asset activity. Financing cash flows come from long-term liability and stockholders' equity. And then our operating cash flow activity comes from current assets and current liabilities. Okay. Now, a gain on sale of equipment is subtracted from net income when determining cash provided by operations under the indirect method. True or false? And again, you could look at page 702, the template, to know where things go. Oh, it's warmer over here. Yeah, you over there, they're sitting in the cold. They've got all the heat over here. Nice and toasty. What? I know. Now you wonder why I'm going to stand over here. Yeah. Yeah. Okay, so what do you think? True. Okay. Okay, so a gain on sale would be subtracted from net income. I believe you're right. Yes. Okay. And that is true. That's what it's, what? Online agrees with me. Great. Okay. So a gain on sale of equipment is subtracted, and the reason it's subtracted is it would have been added, and it's a non-cash item. So we're subtracting it out to make it like it never happened, to convert back to cash basis.
Below what you originally had?
Well, the reason, so we have net income, which is based on accruals and non-cash items. We're trying to get that back to cash. And a gain is a non-cash item because it refers back to when we originally bought it. So the gain part is non-cash. So we're just trying to get it out of there.
Okay.
Yes. Yeah. Okay. Okay, true or false? operating income is typically equal to cash flow from operating activities. There's a definite temperature difference. Yeah. Yeah, it's definitely cold over there, and over there it's a, yeah. Yeah, it's, let's see, whoever. I'm going back to the warm side of the room. Going up here. What do you think? Okay, true. What do you think? True? True? Okay. What do you think? We're going to stand under the heat register. You guys have the warmest spot right here.
It's so nice. I'm enjoying it.
Yes. What do you think? You're going to go false? Okay. Okay. And if you go false, I think you're the right one. Okay. Okay. Now, operating income essentially is same as net income. That's the first thing on the when we're talking about our operating cash flows. And then we have all those adjustments to get cash provided by operating activities. So these are not typically equal. What we're trying to do is we're trying to take operating income, which is on an accrual basis, and convert it to a cash basis. So the two are not typically equal at the beginning. Okay, now we're going to do an activity. And this one I'm going to walk around the class and we're just going to walk through this. I would have those adjustments in front of me. If you have the book, page 702 is an excellent place to start. But this is going to be, we've got a list of our long-term investment, a list of a lot of activities. And these activities are going to be, let me see. Okay, we have to identify whether they're operating, investing, financing, or a non-cash item, which doesn't go on one of those three categories. So you have operating, investing, or financing, or this non-cash idea. And then, furthermore, we need to identify whether it increases cash or decreases cash. What? Yeah. Oh, I have a new thing. Not today, though. Okay, so what we're going to do is I'm going to walk around and get answers from you. And what I'm going to do right now is I'm going to assign your letter to you so you know what I'm coming to ask you. Okay, so I'm going to come to you for A. Okay, B. You'll have to correct me if I C, D, E, F, G, H, I, J, K. Okay. So, okay, L, M, N, O, P, Q, R, S. You're left. Okay. And then the other three of you don't feel left out because we have another activity coming up. Okay. So you'll all have your letter. I'm going to take about a minute, let you decide. You have to have operating, investing, financing, or non-cash item, and then whether it increases or decreases. So look at your item. I'm going to go quiet for a minute. Yeah, if you have questions about the pop quizzes from last week, 5 and 6, those will be updated today.
What is due this Sunday?
You have an attendance quiz due Saturday. Yeah, and we have a video quiz. Yeah, just we had at the beginning a list of, yeah. Mm-hmm. You can actually do everything tonight. It will be available by tonight, yeah. Mm-hmm. Okay, so I'm going to start. So sale of long, you get to be first. Okay, so sale of long-term investment. Is it operating, investing, financing? What? Investing. And did it increase cash or decrease cash? It increased. It would have increased cash. So it's investing, increase. And that's what you want. And that's the right answer. Yes, good, good. So that was easy, right? Okay, okay, yay. So there's one. Okay, next you have B. Issuing long-term note payable to borrow cash. Financing and increasing, yes, so an F plus. That sounds like a grade. So, but yes, you're right, okay. A really bad grade. Yeah, you did F plus. And you have C, right? Okay, so C, increase in prepaid expenses. Operating, minus, yes, you are absolutely right. Operating minus. Okay, it's a current asset other than cash, and increases in assets are decreases in cash. That's one of those things that makes sense after a while, but initially, write it down. Okay. Okay, payment of a cash dividend. Financing, minus. So there's an F minus. So that's worse than the F plus. Yeah. I did really bad. F plus. So you're next. Okay, okay. Okay, so now we have loss on sale of equipment. Operating, increasing, yeah, because it's operating, we have to add it back. It's one of those adjustments. Okay, decrease in merchandise inventory. Operating, you add it because it's a current asset and you do the opposite of what it is. And that's, again, something you would write down. So we would have a decrease in merchandise inventory is an operating increase. Okay, good, good, good. Okay, now yours, you get like the hardest one, okay? And it's kind of a trick. So I don't know that it's even totally fair. Okay, so acquisition of equipment by note payable. Now, this one's kind of weird, right? Yeah. Because you're not sure what to do with it, right? Is there any cash involved in this one? No, there is no cash. There's no cash because what we're saying is we go to the, I was going to say we go to the store to buy equipment, but we go, let's say we go buy a forklift, okay? And this is, so we're a business, we want to go buy a forklift, we get the forklift, we sign the note, and we're going to pay them. So does any cash change hands? No. So what do you think it would be then? Yeah, it would be the non-cash item. So, okay, so see, look there. Okay, so it's a non-cash item, but we do disclose it. The reason we disclose it, it doesn't go on the statement, but it goes below the statement or in the notes because our investors, we just incurred debt, and we impacted financing, we impacted investing without touching cash. So we disclose it, but it doesn't go on the statement as an operating or investing or financing activity. So that's a non-cash item. Okay, now we're back to normal ones. Okay, so H, increase in accounts payable. Actually, that's one of those things up in the operating. I know you did. It's a current asset. So current, or it's a current liability actually. It's a current liability. So changes in current assets and current liabilities, they're like E and F, or like F, okay, but this one is a liability. So, okay, so let's say it's operating, and then we're going to increase or decrease it. Yes, it is increasing, okay, because liabilities, current liabilities, the direction is the same. Current assets, the direction is opposite. So with the current, so on that one, we would have operating increase. Okay. Who did I go with? Yeah, okay. So the next one being Amortization of intangible assets.
Is it
It is operating, yes.
increase in cash?
Yes, it is an adjustment. What it is, it's one of those adjustments where we take net income and add back things. We would have originally deducted amortization expense to get net income, so now we're adding it back because it's a non-cash item. So it is operating increase. Net income, where does it go? Yeah, it is operating, yeah. And increase, yes, absolutely. It's the very first item in our operating section, and net income increases it. If it were net loss, it would decrease it. Okay, payment of long-term debt. Financing, oops, and I answered, I did, yes. And decreases cash, right? Sorry, I got ahead of the thing. Yes, but yes. So there's that dreaded F minus. Non-cash investing or financing. Non-cash, yeah. Yeah. And the I and the F are investing. It's actually investing and financing, but there's no cash involved, so it's non-cash investing or financing, which means it's disclosed, but it's not on the statement. Okay. I do believe we're to you, right? Accrual of salary expense. How about operating? Okay. And the reason accrual, when we say the word accrual, that means this is salaries payable or something payable, salaries, wages payable, salary payable. So that means this is a current liability that's increasing, so it's going to be an increased operating cash flows. Okay, cash sale of land. Investing I plus? Yes, okay. Now which direction did I go? Okay, okay. Purchase of long-term investment, you say I minus, and that sounds good. I minus, yes. Okay. What do you think for the next one? Acquisition of a building by cash payment. Well, what kind of asset do we have there, or liability? With the building, right? Right. Buildings are investing or financing? Investing, yes. So is this going to increase cash or decrease cash? Yes, exactly. So it is I minus. Yes. Okay. So always look at what you're, what you're getting. Okay. Okay. Now over here. So purchase of treasury stock. Okay, so let's go back to the balance sheet. So we have investing activities deal with long-term assets. Okay, what's treasury stock? Treasury stock is our own stocks that we're buying back. So what section of the balance sheet would it go in? Treasury, so stocks, the key word is it's our own stocks. So stockholders equity? Yeah, so it's stockholders equity. So stockholders equity transactions belong in financing, exactly. So then is it going to increase or decrease cash if we're purchasing our own stock back? Decrease. It decreases. So it's going to be a financing minus, an F minus. Okay? Okay, again, looking at treasury stock is a stockholders equity. We're purchasing it, so our cash is going down. Okay, issuing common stock for cash. Okay, financing, it absolutely is. So when we issue, so let's think about it. If we issue common stock for cash, so we're issuing stock, what's happening to our cash? Right, so this would be F plus, yes. Here we are, back to you. Decrease in accrued liabilities. O plus. How about O? I'll go with operating. But this is a liability, and liabilities, the direction is the same direction as the change. Current assets, it's opposite. So in this case, it's going to be O minus. Yes, yes. Okay, and last but not least, depreciation of equipment. O plus. And that is, yeah, it is one of those adjustments, exactly right. Okay, so that is, depreciation is the first item you add back to net income in operating cash flows. Okay, so that's a really good example of some types of questions we can get, and we have that template. You did very well overall here. Okay. Did you see the colors weren't random? I coded them. Yeah. So, okay. Okay, so what's next? Okay, we get to do this again, and now you that got left out, you're on next. Okay, so exercise 1217A, now we're given a series of journal entries. And what we have to do with this is we have to say, this transaction, what's going on in this transaction, and is it going to impact operating, investing, financing, or is it a non-cash investing and financing activity? So, and this one, you're only going to have, we don't have to determine whether it's an increase or decrease in cash. This one's just saying, is this belong operating, investing, financing, or non-cash investing and financing activity? So on this one, there are down to M. So we'll do A through G first. That's on the screen. What? Oh, you should switch it at that time, Brian. Great, thanks. Okay, I'm never walking in front of the camera again. Okay. Okay, so what we're going to do, let me assign letters here. So you get A, B, and C. Okay, and then I'm going to head over here, far away from the camera. Okay, you'll get D, E, F, and G. Okay? And then the rest of you will go on to another page. So what you've got to do is you've got to look at the journal entry, we'll determine what it's for, and then would it impact operating, investing, financing, or a non-cash item. So I guess I'm going to start here with you. Okay, so the first one, depreciation expense and accumulated depreciation. Do you know what's going on with that journal entry? What are we doing? We're actually making the depreciation. You know the answer? What is the answer? Exactly, you are right. This is where we're recognizing depreciation expense, and depreciation expense gets added back to our net income. So, but we don't have to distinguish whether we're increasing or decreasing cash. So it's just operating cash flow. Okay, the next one, debiting treasury stock, crediting cash. Do you know what's going on in that transaction? Well, here, let me tell you. We're buying treasury stock. Okay? So where does it, which section does it belong in? Operating, investing, or financing? How about financing? Okay. Financing, if we think about financing, how can you finance your business? You can finance it through debt or equity. And so any transaction that involves long-term liabilities or equity is a financing activity. Okay? Okay, so that's financing. Okay, what's going on in C, where we're debiting land and crediting cash? We're buying land. So what section does that belong in? Investing, yes, because it is a long-term asset. Okay, D, what's going on in D? We're debiting equipment, crediting cash. Yeah, we're purchasing equipment, so what section does that belong in? Investing, yes, you are absolutely right. Okay, E, salary expense and cash. Well, this is actually going to be operating because it's when we have salary expense, we're paying. Believe me on this one. Yeah, we're paying salaries. So this one actually, yeah, operating. Salary expense is an operating expense. Okay, F, debiting furniture and equipment, furniture and fixtures, crediting cash. What's going on there? Investing, yes, we're buying equipment. Yes. Okay, and G. Okay, in G, we're debiting, building, crediting, note payable. Okay? Right, we don't have cash at all. Exactly, and that's where we were going with this. We don't have cash because what we're doing here is we're buying building by signing a mortgage is what's happening. So this would be one of those non-cash financing and investing activities. So it will be disclosed, but it won't be on the statement proper. Okay, so now we have another page of these. So we'll just go to the next page. Okay. Okay, so over here we're going to go H, I, J, John. J is for John. K, L, and you'll get M. Yes. Yeah. Okay, so take a minute. Try it on your own. Can I ask you a question on H? You have H. Who has H? You have H. Oh, you get the challenging ones. Last time you had the non-cash item. This is not non-cash. But do you have a stab at this one? Well, do you know what's going on here? What's happening here? Right. They're receiving cash for providing service. They're receiving part cash and part on account, right? Okay, so what kind of activity does that feel like? It's operating. That's absolutely right. Yes, it is operating. So very good. Yes. Okay. So that's our normal operating, what's going on in our normal operating business. Okay. Bonds payable debited, cash is credited. What's going on there? What are we doing? We didn't buy bonds because remember bonds, and this again is tricky. When we are, what's happening to cash here? Decreases cash. So we're actually, and bonds payable are ones we've issued. Okay, so this isn't a bond investment. So what your first statement, if this had said bond investment debited, you would be absolutely right. But these are bonds we've issued. So this is where we've gone out, we've issued a bond, and people paid us. Now we're paying it off is what's happening because we're debiting our liability. So we're paying off a bond in I. So is that going to be operating, investing, or financing? Bond payable is a long-term liability. Yes, it would be financing, yes. We get to J, which I know is yours. Okay. What's going on in J? Financing, yes. We're issuing stock, right? Yes. We are issuing stock, so that is a transaction that impacts financing. Okay. What about the next one here? Dividends payable and cash. What are we doing there? Financing, yes, we're actually paying dividends there. Okay, so yes. Okay, loss of disposal of equipment is operating. That's one of those non-cash items that we add back. So absolutely right. and investing. In M, what's going on here is we're selling a long-term investment, so that is an investing activity. Okay. Oh, I guess I got over ambitious here. There we go. Okay. Best, yes. Okay. Okay. The best gauge of a company's ability to produce ample cash to continue as a going concern is net cash provided by. Okay, so we're analyzing a company's ability to produce ample cash to be a going concern. Going concern means they're going to continue into the foreseeable future. Are we going to look at operating, investing, financing, or, well, it can't be D because D isn't anything. So we're looking at operating, investing, or financing. Clearly I'm going where it's warm. What do you think? Yeah. You like operating? And that is absolutely right. It is operating. Yeah. Or put you to sleep, depending, warm and cozy. Okay. Oh, look at that. Guess what time it is? It's coming to the end of class. What's due this week? Okay, attendance quiz. This attendance quiz will be available this afternoon or early this evening. Chapter 11 and 12 homework in My Accounting Lab. And then the video quiz 25 over Chapter 13 Blackboard videos, that's available now. So everything will be available tonight that's due this weekend, Saturday and Sunday. And other than that, have a nice Thanksgiving, and I will see you back Monday. Okay? Stop recording.